traders, welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 17th, 2012. Lots to talk about, so let's get started. Alright, so as we all know, there's Greek elections going on, so let's take a look at the E-mini futures and see what's happening there. Alrighty, this is a chart of the E-mini futures. This is the daily chart. And right now we're trading right at the 345.50. Now the way you can tell what the SPY is going to open up tomorrow with is when you look at the E-mini futures right before the market opens, it'll give you a price. Normally the SPY, and it's not exact to the penny, but the SPY is normally times 10. The E-mini futures, actually I should say, the E-mini futures are times 10 the SPY. So you times 10 the SPY, or you divide by 10 the E-mini futures, and you get the price of the SPY. Okay. So basically the E-mini futures are currently up $8.25. But this doesn't really matter to me right now because it's really early in the trading day to even tell what's going to happen tomorrow. The big one is later on tonight, probably an hour or maybe even moments before the markets open. When you watch the E-mini futures, it'll give you a pretty good idea where the SPY is going to open, and that is something that we're going to need to talk about right now. Alright, this is the daily chart of the SPY, which is the ETF that tracks the S&P 500. Lots of lines here. This is my alert for 3507. Basically, let me move this down a little bit to about 34. Maybe about 34.72. Okay, so here's the deal, right? So it really depends on where we open up tomorrow. It really depends on how the other markets react to this news, the European news, as far as the election and all that goes. Really, it doesn't matter what goes on. What matters is what the technicals are telling us. Normally, the technicals will happen before the actual news comes out, because as we all know, as retail traders, we'll probably get the news at the very last moment. Okay. So here we have this falling wedge here, and a lot of times what I do to get price of after a breakout of a falling wedge is I just grab the middle of down and up tags of the upper trend line and the bottom trend line, and this has worked for me very well in the past, and it still has worked, and it still does work. And what you do is you put it on the breakout of this descending wedge, and then it'll give you a price. This price here right now, what it's giving me is let's see, 137.31, which is actually, believe it or not, a calculated price, or around a calculated price of 137, and I believe it was maybe 2 or 3 cents off. So what that basically means is that there's a possibility, again, that we could get it into this 137 level. I also spent a few hours making additional calculations, and these again are mathematical calculations that I try to match up with current mathematical calculations, such as the moving averages and whatnot. This move here, with using this line here to predict price movement, just like the head and shoulders, where you would get the tip of the head down to the shoulders, will give you a prediction of a minimum of how far either the price will go up or down. This is very similar in fashion, and it does work very well. Well, here's the thing. I do have a level here off the hourly chart, which is at 135.06, and it happens to be at the 50 moving average right on the SPY. It also has this pivot point here. So it's a pretty good resistance point. It's also, let's see, in this 135.06 level, yeah, right into this pivot point here too. So basically the bottom line is I do expect a little bit of a pullback here on this 135.06, and this 135.44, this number still has not changed. It is still off of the SPY daily, which means normally I would use this price in regard to a swing trade. Now, in addition to this 135.44 level, we also have this level here. Actually, this level could be brought up a little bit more. Let's see what the low of this candle was here, which is 135.76. So let me just change that real quick. Alright, it's now at 135.76, this green line here. So if you look all over here, I mean, let me just move this out of the way so this doesn't confuse anybody. It's just an alert, so it'll happen before I can get to it. It'll alert me. Let me just delete this alert here. Alright, now that alert's away, it's gone, and it's a little bit easier to see. This 135.44 line falls right into this previous gap over here. I mean, there's a lot of resistance right in this area here at this 135.44 level. We also have this breakout point here. Breakout points are very popular for pullbacks. And as this also a 135.44, which is a mathematically calculated level, the 135 again 06 level, I would expect a little bit of an intraday pullback on that one. And of course we have this 137 level, and ultimately this 139.98 level, which again has not changed. Okay, so here's the deal. This is playing the stock market is a lot like playing chess, and I notice a lot of my subscribers are interested in chess as well. And you really just have to know what move to make next. Basically, when the market opens tomorrow, I probably intraday would not take a trade until maybe an hour after the market opens, just to see what's going on, what the moves are. Let the markets do what it does. Let it play out. Let all the shakeouts and whatever happen and whatnot, and I'll probably monitor from there. Now, before I would take a trade, and again, this is not a recommendation or anything like that, it's just what I'm going to do in my opinion. Before I take a trade in any of these levels, and I'm speaking of a swing trade, okay, in this matter, I'm definitely going to look at the intraday charts just to see if there's a possible reversal that's about to happen. If there's no reversal, I mean, we get like bullish consolidations, or we get, nothing that's, no higher volume or anything like that, nothing that's indicating a reversal, then I'll wait for the next level. What do I mean by that? Well, I may or may not take this 135.06 as a day trade. I mean, it really depends on the pattern. Again, we have to look at it as in an intraday matter. Let's take a look at the 10-minute so I can give you an example of what I'm talking about. Alright, this is the 10-minute chart of the SPY. So you can see we have this little bit of a shooting star here on pretty good volume, but that's nothing new, because the last 20 minutes of the day and the beginning of the 20 minutes of the day, or the end of the last, pretty much the last hour of the day, is when it gets more volatile. You have high volume here, and it dies down during lunch, and then pops back up during the end of the day. That's common. Okay, I mean, everybody knows that about the stock market. The beginning of the day is busy, and the end of the day is busy. In the middle, it's just it's low volume, and a lot of times people don't short during the middle of the day, simply because the volume is so low, anything can happen. In any case, this 135.06, I mean, if we go just straight up into this 135.06, then I may consider taking that trade. Or if we come straight up right before this 135.06, then we can kind of consolidate, and then that means that there's a possibility that we could spike up into this 135.44, in which case I will not take the 135.06 trade. And that's what I mean by looking at the pattern. We are going to get some resistance here at this for a double top here. That's pretty much what we're already in. Yeah, that's probably why we got a pullback. Let me see if I can find another pullback area. Okay, unfortunately, I had to switch from the 10-minute chart to the hourly chart, simply because my charting only goes back 20 days on the 10-minute. Unfortunately, I'm going to see if they can fix that. But let's just take this 135.44 level, actually 135.45 where I'm drawing the line, but it's close enough. Let me just extend this all the way to the left, like so. And as you can see here, we're right into this pivot here. We're right into this pivot here. We have somewhat of a breakout period there. And then moving down, we have this nice gap fill here. So this 135.44 is a pretty good level. And then right above that is this 137 level, which is right here. Oh no, this is not a 137 level. What level is that? Okay, so one level I failed to mention was this 135.76 level. Okay, so the 135.76 level has these two pivots here, plus somewhat of a gap fill here. But this 130 this level here on the daily chart, I believe, is pretty substantial. You also have a gap window there. So we have tons of resistance points coming up very shortly. Okay, yeah, so we have this 137 level here. Okay, very I mean, and this is extended, this is from the price prediction here, this 135.76 level. Okay, so basically bottom line is, let's just say right now the E-mini futures are at what? Alright, this is daily chart of the E-mini futures. Okay, so right now it's trading at 1,346.75. So that pretty much tells me that if, let's just say, the market's open and the E-mini futures at 1,346, that means that 134.60 is approximately where the SPY should open. Alright, let's just draw a line here as straight as I possibly can. Then I'll put in a price here at 134.60. 134.60. Alright. Okay, so that if this continues is where the SPY should open tomorrow. Okay, it's really that simple. Okay. Now let's just say, for argument's sake, again, you have to be a chess player, that we do open up at this 134.60 level. If we travel, that means that if we travel into this 135.06 or this 135.04, 135.44, then yeah, I probably would take a trade. Not doesn't hurt. I mean, we have a lot of resistance up here. So that, in my opinion, that's probably what I would do. I wouldn't take a, obviously I wouldn't take a big position, but I kind of want to get in a little bit early, just in case, you know, this thing does turn around and come straight down. Again, this is a counter trend. This up move right now, we're still in a confirmed downtrend. So, you know, at any time this guy could just pull back. Again, as stated in previous videos, I mean, if the price if the price is already priced in for this news, because everybody knew what the news is going to be. Either way you looked at it, it was a bullish move, and that's why we had a bullish move on Friday, when everybody thought, well, I wouldn't say everybody, but a lot of analysts that I saw online said that there would be a sell-off on Friday because nobody wanted to take the risk. It obviously wasn't true, and that's why, you know, I kind of stay away from watching the news, and I just concentrate as much as possible as on the technicals. Now, let's just say we actually open above this level here, which is that 135.76 level. Okay, above this level, we open somehow above this level, because really a $8.25 up move in the E-mini futures isn't really that much at all. I mean, if it was going to be big news, I mean, we would be seeing, you know, a 20 plus move in the E-mini futures. Again, that can still happen. It really depends on how the E-mini futures trades tonight. Okay, so that's something that you have to keep your eye on. All right, so now if we actually gap up over this 135.76, hard to believe, but if it does, then I'm staying away from, obviously I'm staying away from the 135.44 and 135.06, and I will not take a trade until we get at least until this 137 level. And if we somehow gap up here, which I highly doubt, but if we do, then I'll wait for this 139.98, and that's pretty much how I'm gonna play it. And I'm just gonna sit back and see what happens. And again, before I enter in any trade, even if we say we open at this level here, you know, at the 134.60, you know, I'm still gonna look at the intraday to see if we are gonna get a possible reversal on the 135.06 or even the 135.44. Okay, now this 135.44 is the daily calculation that the mathematical calculation popped out for me. So I may actually take a trade at the 135.44, you know, pick up a couple calls here and there. But you know, again, it's not going to be a big position. I mean, not a call, a couple puts. It's not going to be a big position, but nonetheless, you know, I want to just get in. It is a downtrend, so that's in my favor. I want to be with the current, not against it. Okay, so that's the SPY. Alrighty, so here's a chart of the daily chart of the dollar. Let me load my drawings in here in the dollar. Remember, now in the previous videos I said, okay, so let me just give you some history. We had this up move here, and then when we reached these two candles here, these first two candles, I said there is a possibility of a bullish consolidation before we hit right back into this 83.61 62 level here. Okay, and then on the third day, but I said we had to, you know, kind of let it go first. I mean, you know, a two candle consolidation to me, or flag pattern doesn't validate a flag pattern. We need at least three. Okay, so we got the third one, and the third candle told us, okay, well, it's not going to be a flag pattern anymore. This is definitely not a flag pattern at all. And then we would have this you know, support line here, and I believe intraday we did get the support, but then we actually broke through it towards the end of the day, and we went right into this 382 level Fibonacci, which is where this candle went here. Now, I did say, and I did mention, I believe that this level here was the level that we're looking at. Okay, so if the dollar can get into this level here, okay, so let me see if we can draw an arrow into this level here, which is approximately about $81.10 around. So maybe about $81. Let me see, about $81 flat. The dollar can get into the $81 for, what was the low? This kind of 81.02. So $81 flat. I do expect a bounce there, because that is some pretty solid you know, support. If we can get through that support, then I'm looking at this $80.50 level here, which is the Fibonacci 618. Now, if we can get through the 618, then the dollar is going to be in big trouble, because the next stop is going to be a double bottom. And, you know, I highly doubt it gets there. But if it does get there, then the 139 level on the SPY does not seem so far anymore, right? But if we can get to this you know, this pivot point here, which is a Fibonacci 50%. We also have this 50 moving average, right? And then we also have this did I mention the pivot point? So we should get at least a bounce here. Now, will we continue higher? It's possible. You know, again, you know, we did create this lower high here, which means all we need is a lower low, and that's what we're getting. So the trend does look like it's changing on the daily. Okay, all we need is a lower low, and that seems like that's what we're getting now. Now the question is, are we gonna get a higher high? You know, two consecutive lower highs before we go even lower? You know, that's really the question. Or do we just pop straight up and make a higher high, which will negate this trend change? Okay, so that's something that we have to keep an eye on. All right. I know a lot of people are bearish this market, and I know a lot of people are bearish this market for for a very long time. But the charts are telling me what the charts are telling me, and right now it's telling me that if we get a bounce off this level here, the trend is definitely changed. We have a high, we have a lower high, we have a we have a low, and then we'll have a lower low. That confirms a trend change, at least on the daily chart. Let's take a look at the weekly chart. This is the weekly chart of the dollar. Let me just delete everything here. Delete all drawings. All right. So looks like definitely we still have a bullish flag pattern, and on the weekly we're definitely not yet in a confirmed trend change. Okay. Right now the trend is still up. You have a high, you have higher highs, and we have another higher high. We have a low, a higher low, and then we could basically make another higher low here before we pop up. So normally what I like to do is look at the weekly when there's discrepancies in the daily, and right now the weekly is still strong in a strong uptrend. So you just want to keep your eye on that, and that again I just want to make mention that the higher time frame will trump basically the lower time frame. So the weekly will trump the daily will trump the hourly. I don't really like to look at the hourly, but the hourly would trump the half an hour, and the half an hour will trump the 10 minute, of course. So if you have a 10-minute chart that's bullish, and you have the hourly that's bearish, then there's a possibility that the 10-minute chart may fail. Okay, that's one thing you want to keep an eye on there. All right, so that's pretty much it about for the markets. So I just wanted to talk about one stock because pretty much all the stocks are going to follow what the market does. Now what you want to do is you want to pick the stocks that are that have a relative weakness in comparison to the market. Right now Walmart unfortunately is in relative strength, but for whatever reason I'm so attracted to Walmart. I've already made money off Walmart on this little pullback here. Let me load my drawings here. So we got this little pullback already from here. Okay, I took the trade, I shorted it, and then Walmart came all the way down here into the 6721 level, and then I had it in a money stop, and then the next day it stopped me out, and then this was Friday's move. It came back down. Now Walmart is still in relative strength. I mean, it's still making a bullish pattern here. There's still a possibility that it can get up to $70.56. Think about it, right? I mean, let's get the length of this candle all the way down to the end of this candle here, and then let me just activate the drawing here so I can make it a little bit longer, and then we'll put it up on here. I mean, so there's a possibility that tomorrow, if we gap up, we could go all the way up into this, $70.56 level. Does it get there? I mean, that's really the question. But if it does, then I'll likely take a short on the $70.56 level. Again, this is not a recommendation. This is just something that I'm thinking about doing. And of course, I'll look at the intraday for a better entry. Now, as Nick Santiago would say at InTheMoneyStocks.com, he, one of the best traders I know, he would say that if you're in a down market, or if you are in a market of weakness, you don't want to pick on the big stocks, because if you pick on the big stocks, which is one of them is Walmart, then any little bid on the S&P 500 or SPY or the Dow or whatever the case this stock may be applied to, this thing is just going to skyrocket higher, right? But if you're wrong in the move and you pick a weak stock in a downtrending market, the stock won't hurt you because it won't go that much higher. I mean, let's look for a stock in weakness. Okay, so this is a chart of LVS, which is Las Vegas Sands. I mean, this is a stock in weakness. Obviously, we have this up move after this consolidation right into this 200 moving average. We came back down, we made a lower low, and then we came up, we made a higher low, a lower high, and then now we're coming back down, and then we're just consolidating sideways for possibly another move down. Now, if we get a spike up tomorrow, then we could possibly get into this 200 moving average again. I don't know. I didn't do any calculations here or any other type of technical analysis. Let's see what these lines say. Okay, so I had this $47.33 level, went all the way into it, okay, and then bounced off, went into it again, went all the way up to the 200 moving average. So to me, in my opinion, that's already done. It came back down, went right back into this 47.33 level again, which again, this is a mathematically calculated level, and then now we're back down again. How far can we go? How high can we go? Well, we could definitely get into this 51.71 level. I have that mathematical calculated level there, but that remains to be seen. The point is this: if the markets start coming down, this stock is definitely in relative weakness. Okay, so if the markets actually go down, then this guy is just going to tank just like it did over here, right? But if the markets catch a bid, then it's this. I wouldn't expect Las Vegas Sands on this based on some crazy news like they just inherited $10 billion. I don't expect this thing to spike very high. I mean, we might just go into this 20 moving average and then that's it. Versus Walmart, we'll go up a couple bucks just on a little move higher on the SPY. So that's basically the bottom line. You want to pick the weaker stocks in a down market, and just that's just the way it is. If you're going to short, you want to pick the weaker ones. Okay. All right. This is a chart of gold. All right. Gold to me indicates inflation and deflation. All right. So right now, again, I've never changed these numbers. These numbers are still in play. I have a $60 and something, $60.96 level here. So about $61. So if we can get to the 161 level here, then I'll probably take a swing short if the dollar can spike. Now, can the dollar get that high? Well, let's see. The dollar went this low. Well, it goes lower faster than it does go higher. So let's grab this candle here. In a single day, let's see how high this candle can possibly go. Let me just see if I can just activate the correct drawing here. And do we get a spike? Yeah, we could definitely get into this 161 level with no problems at all. I mean, if because the markets gap up, if gold gaps lower and then spikes up because of inflation or whatever the case, it could definitely, based off of one candle, get to this 161 level here with no problems at all. So yeah, I'm definitely keeping my eye on that. I'm gonna do a little bit homework on the GOD before I take that trade, but yeah, that's what I'm looking at now. So right now I have my eyes set on gold and Walmart. There's gonna be other stocks that I gotta do my homework on for tonight. You guys should all do your homework as well. Look for stocks. I'd be looking for short entries. The ability to short. I mean, if you can't short because for whatever reason, you don't have a margin or whatever the case, and shorting is dangerous. Don't get me wrong. So a lot of people don't short. But if you want to go short the market, you can buy the SDS. Let's take a look at that. Alright, this is the daily chart of the SDS. As you can see here, it says ProShares Ultra Short the S&P 500. Basically, this is a 2-time short opposite of the SPY. Meaning, if you go long, meaning you buy the SDS, not sell, you buy the SDS, that's the opposite of the SPY. So if you go long the SDS and the SPY goes down, then the SDS will go up 2 times or two times the SPY. Okay, so I believe it's a 2-time ultra short, or it's a 2-time short. You know what? Let me see if I have some drawings on the SDS. Actually, it looks like I do. These are old drawings. Let me do some quick calculations for you. I'm gonna put this video on pause. Alright, so I did some mathematical calculations on the SDS, and this is what I came up with. I have a level of 1815. That level has already been taken out. As you can see right here, let me just get my trend line tool over here. As you can see, this level has already been used up. Okay, it's kind of used and abused, went right into it and came right back down. So this is off the table, so I'm not going to use this one anymore. And then I have a 1839. We pretty much got close enough to it to validate that this is probably used up as well. So I'll take this off the table. And then I have a level which is at 1887, which is really close to this fib level at 1897, and we're real close to this 200 moving average. So we could possibly pierce through this 200 moving average before we get a pullback on the SDS. So that's as high as I expect the SDS to go. Actually, I'm supposed to look at the other direction, so let me take a look at that. Hold on. Alright, so I made additional calculations here, and I have the $16 level. And then I have, believe it or not, a 1407, interestingly enough. Again, I don't make up these numbers, it just spits it out. So there's a possibility we could get all the way down to this 1407 level. So that's something that we want to keep an eye on just in case. But I do have a level here at $16, which it pretty much came pretty close to. So I don't really trust this. Again, I want to make the odds in my favor. So it's already close to this level, and the day has closed. It may actually pierce through it. I'll have to investigate that on the intraday. But that's the SDS. So if you buy the SDS long, then that's shorting the SPY. Okay. So that's pretty much it. This is your 7-minute market update. God bless to you all. Thank you for watching, and hope to see you in the next video.